Okay, good afternoon, everyone. How are you? How is everyone? I really hope you are all doing very well today. And welcome to IUX Affiliates Workshop 2025. And this will be our exclusive trading workshop where we'll be diving deep into the exciting world of trading. And first of all, let me introduce myself. My name is Cristo, and I'm honored to be your host for this session. And first of all, let me extend a warm welcome to all of our participants today, whether you are a beginner looking to get started as an IBs or affiliate maybe, or the experienced one seeking new insights. And we are very thrilled to have you here today. And before we begin, let's take a moment to thank IUX for making this event possible. Their support allows us to create opportunities like this to learn and to grow more. Okay, what to expect today? So today we are going to have an amazing lineup of speaker who will be sharing their background, their experience, their expertise, their own story on trading strategies, market trends, and also risk management. And the good news is you'll get the chance to engage in interactive discussions and Q&A sessions. Plus, there will be hands-on activities to help you apply what you have learned on this session. And of course, we encourage you to build network and connect with the fellow traders, exchange ideas, and make the most of this experience. All right, without further ado, let's get started. And to officially open our workshop today, please join me in welcoming our esteemed speaker who will be sharing insights about common trading mistakes and how to avoid them. And let's give him a big round of applause for Mr. Karyong.
Hello, everyone. Right.
Hi, Mr.
Yep. Maybe what we can do is, yep. Thank you for the slides. Right. So once again, thank you, IUX, for having me today. I'll do a very quick introduction about myself, and we'll dive straight into today's content because we've prepared quite a bit, and hopefully I'll be able to go through all of them in the time given. Okay, so very quick introduction about myself. My name is Karyong. I started my trading journey back in June 2012. So to date, that's almost close to 13 years. I came into the industry not really like knowing what exactly trading is, but kind of came across online. That's how I got started. And of course, 2012, 2013, it's kind of like the exploration stage, which if today you're fairly new to trading, that's why the common topic here is also about mistakes and how to avoid them so you can, make less mistakes, less painful mistakes. Every trader goes through that, right? So those are the years that I have. And then in 2015, I have this opportunity to turn full time. At the same time, in 2015, I started doing a lot of sharings, physical workshops as well, to really give traders the proper education and understanding about market. Okay, so hopefully today's session here will give you some insights. And as mentioned by Christoph, it's very interactive. If you have any questions, feel free to put it into the comments tab. We may not immediately able to answer questions, but we do have Q&A segment, and we'll be going through some of those questions to interact and answer as much as we can. All good? Right, so keep your comments coming. And I think it's important to also interact, right? So if there are certain things that we went through, along the way, and you feel that, oh, that's really important, do some interaction, put it into the comment, whether typing yes, typing one, so that everyone who are here today, will be also awake, right? And kind of like, oh, that's an important point. Then they will start to take note, okay? So good. So let's get started. Let's talk about common trading mistakes and how to avoid them, okay? So there are a couple of common mistakes that I feel majority of a trader would actually experience. And over here, I really want to highlight them and to share with you how you can actually avoid it, okay? So number one, over trading, okay? Maybe very quick show of hand. Obviously I can't see you. So what I want you to do is type one. If you are very new to trading. Now, how do I define that? Is if today you are, experience in the market less than, I would say, 6 months, okay, put a 1. If you are, trading more than 6 months, more than a year, drop 2 in the comment, right? So kind of give us an idea how many of you are fairly new, how many of you have a couple of experience, okay? Now, this is important because you want to also understand which stage of trading you are in terms of, are you acquiring knowledge? Are you in the phase of learning, or are you at the phase of improving? Okay. So the first mistake over here is really about over trading. And all traders will go through this in some part of their journey. And your role here is to really identify this and to avoid it. Right. So what exactly is overtrading? Overtrading is where today, you're taking trades more than you need to. You are taking a lot of trades in a very short period of time, perhaps due to greed, perhaps due to revenge trading where you had a loss and then you want to recover that in the shortest time possible. And this can actually happen. Right. So what you want to do when I go through all this is to identify, did you actually made such mistakes in your journey? And if you do, it's time to actually be aware of it and kind of cut it, right? So you want to avoid making these mistakes in the future, or making less mistakes in the future, right? So common things that you can actually use to avoid, and how to avoid these mistakes is, number one, you need to have a trading plan. Okay. Now, in the later part of today's sharing, I'll be covering with you a framework to help you have a concrete and systematic plan to approach trading. Right. So you need to have a trading plan, right? Everyone will have a slightly different plan, but you need to have one to trade, which is essentially some sort of a criteria, some sort of a conditions for you to actually execute a trade. Okay. Now, you also want to set what we call a daily limit or a weekly limit. In other words, how many trades maximum are you going to look at in a single day, in a single week? If today you are encountering losses, what is your maximum losing trade that you were going to be stop trading for, that maybe that week or that day, right? So this is important. And a lot of times trader would have the misunderstanding that, the more trades I take, the more profitable I'm going to become. That's not true as well, right? Because as traders, what you want to be looking at is quality more than quantity, right? In other words, you want to take high profitable, highly probable trades, where you want to increase your win rate, your accuracy, instead of just firing your trades all over the place. Right? So you need to start tracking as well, right? You need to know, are you taking too many trades this week? Where are some of the mistakes? So trade journaling is also very important. Okay, so these are some tips for you to actually encounter and overcome, okay, what we call over trading. Now, mistake number 2, right? Just like I mentioned, that it's very important to have a trading plan. Now, if today you are trading the markets without any actual strategy or a kind of plan itself, a system itself, you're essentially gambling, right? In other words, today you come into the markets, and then you feel like buying, you buy it. You feel like selling, you sell it. You don't have a proper plan. That's not trading, right? That's essentially, as I mentioned, gambling, right? So what a trading plan is actually sort of a business plan where you have a clear, defined criteria, strategy, conditions that allow you to execute trade, right? So today, if you feel that, or you start to observe, you are actually deciding on trades based on how you feel. Some days you're taking certain strategy, the other days you are kind of using, some sort of different strategy. You're jumping across different methods. That's not a clear plan. Okay, so as you are trading and you start to experience all this, you start to be aware of all this, then you need to identify that is a potential mistake. Okay, so that's why in the later part I can't cover, we will talk about a framework to also help you establish your clear trading plan. Right, so what is a trading plan? In short, okay, you need to have these conditions in place, right? You need to, number one, define which market you're going to look at. Is it going to be just the major currencies? Are you going to look at cross pairs? Are you going to look at different assets like commodities, even gold, silver, crude oil? Are you looking at indices? Are you looking at cryptos, futures markets, right? You need to define that. Okay, now, of course, if today you're very new, the suggestion is start small and then slowly expand your scope in the market. Okay, Your trading plan obviously need to have your entry and exit criteria. You know, when to get in, how are you going to get out, which price are you going to put your stop loss, how are you going to define all these things. Okay, risk management obviously very important, right? You need to define where to put your stop, what is your position size, what is the maximum risk you're going to put in that particular trade. Okay, and of course this can extend to more deeper approach to it, like, you know, risk exposure, market correlation, and all those topics, right? So of course, if today you're doing intraday, right, that means you're looking at maybe shorter time frame, like 15-minute, 5-minute, or even the 1-minute time frame charts. Those are what I categorize as intraday. Your time sensitivity is very, very important. Hey, now what I mean by that is obviously in the FX world we have a 24 hours market, but it doesn't mean that every other time in the day the market functions similarly, right? We have the Asia market, we have the London market, we have the US market. You need to be defining, right, your strategy best suit for which particular session, right? So all this needs to go into your trading plan. Okay. Now a lot of times traders will feel very overwhelmed that, well, there's so many things, you know, how do I take care of so many things? I always say trading plan is not a one size fit all. The trading plan is not set in stone. You want to progressively improve on it, right? Which means that you want to start with maybe a simple draft and then you realize, oh, there's certain things missing. Let's add on to my trading plan, right? It's a works in progress. Okay, so this is something very, very important as well to help you kind of avoid that mistake, okay, of not having a proper strategy, not having a proper plan. Number 3, poor risk management, which I kind of also mentioned. Okay, a lot of times traders will have the impression that the strategy is the most important aspect, right? But actually, without proper risk management, doesn't matter which strategy you're going to be using, you're going to lose money or lose big if you don't have your proper understanding of risk management, right? Why? Because there's no such strategy that's going to give you a 100% win rate. Okay, there will be losses, there will be winnings. If today you don't know how to manage your risks, then obviously you don't even need to talk about profits, right? Because your profits will be easily wiped out. Okay, so risk management over here is easier said than done. There are, of course, the technical aspect, you know, of calculation, your lot size, position size, etc. But more importantly, there's also the element of psychology, right? Because today you can understand about risk management, but if you don't have the discipline to put that, that's your psychology, right? That's not really about knowing or not, okay? Because you know it's important, but you don't do it. You don't have the discipline to do it. That's psychology, right? Then, of course, today, if you are putting, you know, for example, random lot size, right? You feel like, let's do a 1-lot trade, okay? And then tomorrow, let's do a 2-lot trade without properly understanding what it means. That's a mistake, okay? If you're taking too big a risk on a particular single trade, that's also a potential mistake, right? Or today, if you're simply just moving your stop loss because you don't want to accept that loss, that's also a potential mistake, right? So over here, what you want to do to help avoid it, okay, is to always take minimum amount of risk, right? It's not like every trader needs to only take 1 to 2% of risk. This is very, very subjective, but at the start, the suggestion is always start small. Okay, and of course, over here is about 1 to 2%. It's fine because even if you take a consecutive maybe 5 to 10 trades of losses, you won't suffer too badly, right? And that's why we always kind of talk about like 1 to 2%. Okay, but obviously you can go smaller, you can go bigger. Once you understand what risk management is, you understand your own personal risk tolerance. Okay, now stop loss here is important, right? A lot of times traders would talk about entry and targets first, then we need to talk about stop loss, right? But my priority and focus is always, if today I'm going to enter a trade, I want to know where am I going to get out if I'm wrong. Okay, we talk about that first before we even talk about profits, right? Because you need to know before you take the trade, where are you going to cut your loss? Okay, and then of course, talking about position sizing over here, it's important to use a dynamic position size calculator. A lot of times traders would set a fixed stop loss, right? They would tell me, oh, my strategy here, I'm going to enter and then I'm going to put a 20 pip stop, right? But what I would always share is that the markets are dynamic. Volatility shifts every other day. if today you're going to just simply use a 20 bit fixed stop loss on every other trade you're going to take, you are actually not factoring in the market volatility. Okay, so that's something you want to be aware of as well. I always would calculate my position size based on the stop loss, not the other way. Okay, and of course, never revenge trade. Okay, if you take a loss, if you take 2 losses, okay, if you need to walk away from a trade and then come back another day, right, kind of refresh yourself from there. Once you start revenge trading, it's a spiral effect because you're gonna make more mistakes, you're gonna make more losses, and then you keep going on, right? You keep on kind of like making more and more losses, and then that's a cycle itself, right? So you want to avoid that. Okay. Number 4, okay, letting your emotions take control of your trade. So that's actually your psychological aspect of trading, right? So the biggest psychology that traders face is always fear and greed. Okay, fear here we are talking about like fear of missing out, FOMO. Okay, where you might see, oh, the market has been moving, you're not in that trade, you can't feel that you miss out on it, and then you jump in. Okay, so that's FOMO. Then there's also the fear of losses, right? Where before you take the trade, you kind of like being anxious, you're worried. Okay, what if I take this trade and then this trade doesn't work out? What if it's going to be lost, right? So there's the fear of loss, that's the fear of missing out. Okay, so it's kind of like the 2 different extremes. Now, FOMO is something that you want to be aware in such a way where the market would always be there. New opportunities will always surface itself. Okay, so from that understanding, there's really no need to be FOMO because there's abundance of opportunities in the market. You miss out this, it's fine. Focus on the next one. Okay. Fear of loss. Okay, that's actually very, very easy to encounter and kind of like overcome. My suggestion is always trade the smallest lot size possible if you're experiencing fear of losses. Okay, why? Because if today you're taking the smallest lot size, smallest position that you can, take in the market, even if it's a loss, it's not going to be very, very painful, right? And then you start to build your confidence from there, and then you start to increase your lot size, you start to increase your risk per trade. Okay, so those are some ideas in which you can actually use to overcome this aspect. Okay, now having said all this, obviously you need to have a proper trading strategy, a proper trading plan, which in the later part of today's session, I'm going to give you that as well, so that you can actually develop, or even if today you have one, hopefully helps to improve on your existing trading plan itself. Okay, now today, if you are also kind of practicing what we call mindfulness, which means kind of like, really taking some time to understand like what are your thought processes, right? If you take a win, how do you feel, right? Assess on the emotions itself. If you take a loss, okay, how are you feeling? What are your thoughts? Okay, this is what we call mindfulness, right? As a trader, the more you develop the skill, the better it is you're going to develop yourself as a trader, because a lot of times mistakes comes from not so much on the knowledge aspect, right? A lot of traders would know about things, but they don't have the psychology to help them maintain the discipline on that, right? So that's all coming from mindfulness. Okay, so you also want to really work on that aspect, right, which is basically working on yourself. Okay, hopefully everyone is following through. Okay, so far so good. Now, mistake number 5. Okay, so ignoring market conditions, right? This is something that I can't mention when we talk about stop loss. Okay, today if you fix your stop loss point, you're ignoring market conditions, right? So market conditions, you're referring to a couple of things, right? Number 1, we're talking about, is the market trending? Is the market ranging? Is the market high volatility? Is the market trading in low volatility? Okay, you need to understand that aspect, that the market is never going to be constant all the time, especially this year you can experience at the beginning of the year we have very, very volatile movement, right? And then some period of time we have like the market simply just bouncing up and down, it's not really going anywhere. Okay, so you want to be able to identify that and adopt your strategy accordingly, right? Because some strategies are great when the market is trending, some strategies are great when the market is ranging. Okay, so you need to recognize that there will be a shift in market conditions, and you need to very, very quickly adapt to that. Okay, so how to kind of like understand this, right? In the simplest way, okay, you want to first understand the broader market perspective, right? That means you want to look at a bigger picture perspective. Is the market or whatever asset you're looking trending? Okay, are they coming into certain very important key areas that you want to keep an eye on? Okay, then you adopt your strategy accordingly, right? So if today you're doing a trend following strategy and the market is trending fantastic, right? If the market is in a range, your trend strategy will not work. Okay, so you need to adapt. Then, of course, if today you're not aware of important news, right? Certain news are predefined. For example, your NFP every first Friday of the month is defined, right? Your interest rate decision is already well defined. Those news, if you know how to handle and trade them, great, right? If not, my suggestion is avoid them if you're very new to trading. There's also some aspect of news that are unforeseen, right? For example, Trump policy would impact the financial market. Okay, and that is not well defined because he can actually announce something just suddenly, right? And the market would move. Okay, so these are some things that come along with a trader if you have some experience in the market. Okay, and eventually, as you pay more kind of effort in the market, you start to monitor them a little bit more. You start to understand the different factors that can affect the markets. You gain all this knowledge, you gain more confidence in it. You'll be able to then start to understand, right? Certain events would affect the market in a certain way, and how are you going to avoid it? How you can take advantage of that? Okay, so understanding market would shift and its condition is very, very important. Number 6. Okay, this is a little bit overlap with the psychological aspect where we talk about FOMO. Okay, and a lot of traders actually experience this or kind of like did these mistakes without them even being aware, right? Oftentimes when I talk about market outlook, traders would say, "Oh, market is moving. Can I get in now?" Right? Price is already going high, right? Can I sell it now? Okay. When you start to have this kind of questions, right? Whether you're asking yourself, you're asking someone else, then you realize that number one, you don't have a proper plan, right? Because you are asking someone else whether to be buying, whether to be selling, what to be doing with their trade. This means that you don't have a proper plan defined. Okay. Number two, that also implies that you are actually making decision based on emotions, right? You're not really following a systematic strategy. Okay, you can't feel that, oh, the market has been moving, you want to get involved in it, and therefore you need a confirmation from an external party to help you make that decision, right? So that is again going into psychological aspect. Okay, so as you identify all this, right, you want to be aware of it. Okay, and how you can avoid again is to have a proper trading plan. Okay, so FOMO, psychological aspect of trading, okay, having the discipline is very, very important. Okay, so hopefully that's clear, yeah? Last one here I want to cover in terms of the mistakes is not having a journal. Okay, or today a lot of traders are tracking the wrong things. Okay, now when we mean journal here, it's not so much about writing down where your entry point is, where your stop loss is, what's the result. Okay, why? Because your broker statement does that for you, right? You have your MT4 statement, you have your MT5 statement. You can look at that very, very quickly. You can even link it to certain platforms to help you track all this performance. Okay, so in today's technology, a lot of all this has been automated for you. But what is still important in your trading journey or trading journal itself is basically your thought process. Okay, now what I mean by that is you want to track down when you take this trade, how do you approach it, right? Why are you taking it? The why element is very important. Okay, and then of course, when there's an outcome of the trade, whether is it winning or losing, you need to then also track what do you feel, what actually contributes to that trade being a winning trade. Okay, now the more you are aware of this, the better it is you're going to be, because if today you can track down what exactly contributes to a profitable trade, you can actually repeat that process, right? If today you tell me, oh, I don't know why I win this trade, okay, I have no idea what contributed to this trade being high probability, then you're essentially just gambling, right? You're basically flipping a coin. Okay, so you need to be able to pinpoint what are the aspects that give you an edge over the market. Okay, similarly, if today you take a loss, you want to then identify, okay, what elements am I missing out that could be improved so that I can avoid taking another losing trades, or how minimize, okay, the chance that this trade will not work out. Okay, so all these things can only be analyzed if you track it. Okay, if today you don't track something, there's no way of knowing whether you can work on it and improve. Hopefully that helps, right? So of course, certain important things to keep track is of course the exit entry. I mean, these are very, very common things, but the why, right? So I can't mention like the reasons for the trade, your thought process. Okay, so that is very important. Market conditions, I can't mention, it shifts. So you also want to understand when you take this trade, what conditions are the market in? Is there a news, right? Is it in a trending environment? What's happening on a higher time frame, bigger picture perspective? So when you analyze it, okay, maybe you did not follow a bigger picture trend, right? Maybe you are putting a trend strategy in a range environment. Maybe there's a news that you weren't aware of, right? So all these things can actually help you to improve, okay, in your journal. Okay, so emotions, of course, what are your thought process, how you're feeling, and things like that. Okay, so hopefully you guys are actually taking down notes, right, and kind of like also being able to identify like what are the areas in which you can actually improve in your trading. Okay, so this one, hopefully everyone is following through. Yeah, good. So quick summary before I move into the next segment, and then I'll take another like 10 minutes before going to break. But quick summary over here. Okay, so we cover the first part, how to avoid these mistakes, right? We talk about 7 total mistakes. Okay, a lot of times it comes back down to having a proper plan, having a proper business trading plan. It's a systematic trading plan, having the discipline to follow through, and of course the psychological aspect. Okay, so you want to treat business, I would say treat trading as a business. Okay, a lot of times traders are taking trading as a casino environment, right? You come in, you just buy based on what you feel, you just sell based on what you feel, you just exit a trade because you're afraid of it losing, or you can't move your stop because you don't want to take the loss. A lot of all these mistakes actually piles up and they accumulate in such a way that it will have a very big detrimental effect, on your trading journey. Okay, so the earlier you get aware of them, the earlier you're able to avoid these mistakes, the faster you're going to be in terms of like making profitable and being consistent in the market. Okay, focus on the process more than the profit, right? Especially if today you're fairly new in the markets. Okay, as I mentioned today, if you're more or less like within the 6 months period of trading, you're not here to make money in the first 6 months, right? You're here to really acquire as much knowledge as possible and then grow from there. Okay, so this is very important. The beauty about trading is that it is scalable. Okay, now what I mean by that is when you are starting new, you start small. Okay, but as you build up that skill set, doing the same thing would result in a bigger outcome as well. For example, right, today, if you're able to make 1% maybe a week, or 1% on 5 days, right? So it's a week of trading, right? And then on average, maybe in a month, you make about 2 to 3% on average. Okay. Now that 2 to 3% on the small account is nothing, but if you start to grow that account, right, you scale it up. Similar effort of 2 to 3% on a single month becomes, a sizable number, right? So that's what I mean by scalability. So as a trader, you don't want to focus on like immediate profits in terms of dollar. Okay, you want to focus more of like percentage wise. How can I be consistent? How can I grow this? How can I scale this up so that doing the same exact thing, okay, now gives me a better reward. Okay, so these are something that you also want to be aware of. Okay, so hopefully that gives you guys some ideas in terms of, you know, how to avoid such mistakes, how to be aware of all these mistakes. Okay, good. So I see here comment from SK, agree on that, right? Great. All right, hopefully everyone here today understand where I'm coming from and why these are actually very important. Okay, good. I'll take a little bit of time here before we go to break to share with you this first. Okay, because once we come back from a break, there are more content, so I just want to cover on this. Use the next 10 minutes to talk about this. Okay, now the first part here is really giving you the knowledge and, you know, understanding of what are some of the common mistakes that traders tends to face. If today you are actively trading yourself, you want to be aware of it. If today you are running more of like an IB business, it's also very important for you as an IB to understand all these mistakes, because you want to guide your, you know, customer base, right? If today you get your friends, you get your customers to come in to trade under you as an IB, right? You also want to share with them all this so that when they face certain negative experience, they face certain challenges, you know how to help them. Okay. So this second part here is to share with you some framework to approach the market, so you can also use this understanding and knowledge to share it with your trader. Or if today you're trading yourself, great. Hopefully this insights and framework will also help you as a trader. Okay. So there are three parts here, but you know, we'll cover first part before we go to the break, and then after the break, we'll come back and cover the remaining parts of the presentation. Okay. So we'll be talking about importance in terms of the terminologies and understanding of what the trading environment is. Okay, and then after the break, we'll talk about strategies. We'll talk about how you can become an effective IB. Okay, so let's cover on the important basics of trading. Okay, so number one, risk management, which I can't emphasize how important this is. Okay, I personally always talk about downside first before the upside, right? A lot of times traders would ask questions like, you know, with this strategy, how much can you win? Okay, so that's talking about upside, right? That's talking about profitability. But I always like to talk about, before you enter a trade, what's the worst case scenario? Okay, so we always talk about downside, how you can mitigate that, how you can protect yourself from that. Then only you talk about upside, right? Because the whole idea here is every time you can make a lot of money, but if you don't know how to protect them, you can lose it all very quickly. Okay, so risk management is important. Okay, it ensures that you stays in the game long enough for you to actually take advantage of the market. Okay, so in short, you want to not risk more than 1 to 2%, right? Of course, sometimes you feel very confident about that trade, you can go a little bit bigger. But my take is never go beyond like 10% per trade, right? I mean, there are some strategies that go full margin on trading. That's fine if you understand your total kind of like portfolio management, right? If today you have like multiple accounts with different account sizes, you know, some accounts you might take massive amount of risk, some accounts are more conservative. That's fine, right? That's portfolio management. But today, if you're only taking one account and you're just managing that one account, you want to do very, very strict risk management, right? So the suggestion here, of course, is to stick to 1 to 2%. Okay, always have a stop loss in place. Okay. Trade psychology, I can't emphasize this quite a bit already, right? There's fear, there's greed, overconfidence, lack of confidence. So all these things are something you want to be aware of. Okay. It's not just about taking losses. Sometimes, you know, you might be taking a streak of winnings, and then you start to be a little bit more confident, and you start saying that, wow, that's great. Let's increase my lot size. Let's increase my risk. And then you start to suffer a trade-off two of losses. And then you go back into a spiral effect of like, oh, I want to make it back, revenge trading, right? So always be aware of your screen psychology. Okay. So this is a very important element. Liquidity. This one is something that a lot of traders are not fully aware of it as well. But liquidity here, I can't mention today. If you're looking at smaller time frame, you're looking at intraday. Liquidity is very important, right? Because Asia liquidity is lower, London market is higher in liquidity, US market is higher in liquidity. Okay, this would have an impact in price movement. This will have an impact in your trading. Okay, so generally, if you're doing intraday, smaller time frames, you want to trade when the market is liquid. Okay, or I would say higher in liquidity, right? And that's your London and the US market. Okay, so be aware of that as well. Market volatility refers to how prices are moving. Okay, if it's very volatile, means that prices are moving fast. Low volatility means market is really not moving. Okay, and of course, when there's certain news event, the market will be a little bit more volatile. There's also a misunderstanding where traders would perceive volatility as risk. It's not necessarily the case, right? Because if the market doesn't move, you can make money as a trader. Okay, you need a market to move, right? But then you need to have the skill set in managing market volatility. Okay, so you need the market to move, but you need to learn how to protect yourself if it goes beyond the usual range of volatility, right? And that's where your stop losses comes in. Okay, so understand that volatility equals to how the market is moving, fast or slow. High volatility doesn't mean that it's bad. Okay, because especially newer traders, right? This one is something you need to educate them as well. When a trader says, "Oh, I don't want to trade this asset because it's very volatile," okay, and they would have the impression that it's high risk. It's not entirely true, right? Because at the end of the day, as a trader, you have the power to manage your own risks. Okay, it doesn't matter market is volatile or not. You have the decision on how high risk you want to go in, or how low risk you want to go in. Okay, market session. I kind of talk about this as well already, right? Asia, US, UK, right? Or Asia, London, and the New York. Okay, so be aware of that if you're doing intraday. Good. Okay, very quick one. We have like 3 minutes before the break. After the break, we'll come back and talk about effective trading strategy. You want to use this break to kind of like digest what we've covered. I mean, there are quite a bit of things that we've covered so far. Take this break to digest. You might have questions. As I mentioned, you want to post it up immediately. We may not answer it now, but after this, we have a Q&A segment. We'll look through all the questions and answer them accordingly. Okay, good. Let me pass back to Crystal.
All right. Thank you so much for the tips and insights, Mr. Karyong Ang. I might say that the knowledge are all well explained. I also gain more knowledge after hearing your presentation. The highlight is first, don't overtrade except you want to lose your money in a quick time, right? And the second is make sure you are clear with your plan. So everything should be calculated, right? Do not settle everything based on emotions. Third mistake to avoid is the poor risk management. And the point that impressed me the most is do not revenge the loss. So we still have to stick with our strategy. And the next mistake to avoid is letting emotions control your action in trading. And the next is underestimate the market conditions. So market is never be that stable and constant. And that's why IUX is inviting all of you to join this session to update more about the current market condition. And the next is chasing trades or FOMO trades, fear of missing out. So it caused by impatient and unstable emotion in doing the trading. And the last mistake to avoid is not keeping your trading journal. I think it is more about self-reflection, right? So how far we can determine our discipline in trading, just like everything in this world, when we are starting a new thing, new hobby, new job, we should be able to see how far we have improved and what mistakes we have did. All right, so I believe everyone here is gaining more knowledge as well, just like me. And yeah, maybe I can say thank you as well for the audience for being here and for trusting IUX session and trusting Mr. Karyong to develop our knowledge in trading together. And don't forget that later we have the second session with Mr. Karyong Ang. So he will be explaining about his second presentation to all of us. And do not forget that we also have the Q&A session with our speakers. So please prepare your question. Please prepare something that made you curious about trading world, because we have very right speaker today, and I believe that Mr. Karyong will be happy to answer all the questions, because I see that he is very happy to come here and to share the knowledge, the experience, the expertise about trading. So later, all of us will be a better trader. I can see on the comment section that we have people from Thailand. Hi, Sawadee Krap. And also from Indonesia, from my country. Anything else from the other country here? Maybe from the Philippines. Mabuhay. Okay, so I know that everyone is listening very serious about Mr. Karyong presentation, and I also believe that the crew, the audience also need time to break. So maybe for those who would like to go to the toilet, to drink some coffee, to drink some water, to make you more focused on the next session, please, because we have a few minutes break time. And later on, we will have the second presentation that will be presented still by the one and only Mr. Karyong Ang. Thank you, and let's have a break. All right, good afternoon, traders, and welcome back to IUX Affiliates Workshop 2025. So, have you drank some water or ate some snacks or fruit to make yourself focus again? Because we are going to enjoy. We are going to pay attention to the second presentation presented by Mr. Karyong Ang about effective trading strategy. So, please join me again to welcome the one and only speaker for today, and this is Mr. Karyong Ang.
All right, welcome back. If you can help me to put up the slides, right? Okay, good. Thank you. All right, good. Okay, so welcome back. So this session over here, we'll be talking about the framework as well as giving you a simple yet effective strategy. And then after that, we'll cover, a little bit in terms of how you can be a effective IB, okay, to assist your client as much as you can, okay, and of course how to build up that business part of it. Hey, so let's talk about this effective trading strategy. I've came up with this framework called the DSC framework, and I personally believe that the DSC framework is actually a universal framework for all trading strategy, right? In other words, it doesn't matter what method you use, what strategy you use. At the end of the day, it will fit into the DSC framework. Okay, and this framework serves to provide you a clarity in knowing what aspect of your strategy that needs improvement, that needs to be worked on. Okay, so what's the DSC framework? It stands for direction, setup, and context. Okay, now very quickly talk a little bit about that. Now, direction, I think, is pretty straightforward, right? Today, if you want to take a trade, you need to have a directional bias. You need to be able to identify whether the market has a high probability of going up or there's a high probability of coming down. Okay, or if the market direction is not clear, you stay out of it, right? You have a neutral bias. Okay, so it doesn't matter what method you use, right? It can be technical indicators, it can be chart patterns, it can be fundamental analysis. You need a method to determine what directional bias you want to be established. Okay, meaning if you're bullish bias, you only want to look for buy. If you only are bearish bias, you want to look only for sell, right? You need to have a method on that. Okay. However, you will realize that in trading, direction is not everything, because sometimes you may experience, you buy into a trade, you expect the market to go up, it didn't go up immediately, it comes down, hit your stop, and then eventually hit higher, right? So you stop you out before going in the direction that you have anticipated. So direction itself, you get it right, but what was the aspect that you can work on is actually timing, right? You didn't get in at the most optimum time or price point, and therefore you hit a stop before eventually market hit towards your direction. Okay, so direction itself is not everything. It's important to give you that clarity, but you also need to know when to get in, which price to get in, right? And that's where we talk about time element. That's where the second part of the framework comes in, setup. Okay, so setup essentially is just a set of conditions, a set of criteria of when to get in, when to get out, what price to get in, what price to get out, right? So again, you have many different ways you can use to establish a setup. You can use technical indicators, you can use chart patterns, you can use candlestick patterns, you can use time element, right? So that's essentially what setup is. Okay, and then the last aspect of this framework is called context, right? Context here is talking about what other elements can actually support your trade, right? If today you want to buy, you want to look at a specific instrument, right? What is this instrument doing on a bigger picture perspective, right? If today you are only looking at technical analysis, then fundamental becomes the context. Okay, if you're looking at shorter time frame, higher time frame becomes the context, right? Context also talks about risk reward ratio, right? Is this trade worth taking? Is there sufficient room in which price can move to hit your targets and things like that, right? So context kind of gel everything together to increase the probability of the particular trade, right? So direction, setup, context, okay? So today, I'm going to share with you a very simple strategy that fits into this framework of direction, setup, and context, okay? So over here, it's going to be a strategy based on a intraday perspective, right? Shorter time frame, 15-minute charts. Personally, I take trades primarily on the hourly, so I'm more of a swing trade. So I look at 4-hour and an hourly. But when I have the time, I also consider like intraday, 15-minute time frame. Right now, I have multiple different strategies that I use to trade the market. The primary principle I always look into are Elliott wave, Fibonacci, right? And recently, if you have been trading, you heard of this term before, SMC, right? Smart money concept. Okay. So today, when we talk about this strategy over here, is more towards the SMC principle, right? We will not cover too much into the Elliott wave because that would be a pretty advanced topic, maybe for another time. But for today, it's a very simple. The idea behind it is I want you to gain clarity of how the VSC framework is being applied. Okay, so directional bias, right? The first thing that we always want to do is to establish, do we want to focus on buy or do we want to focus on sell? Or if the market is not clear, we don't want to trade. Okay, so over here, when we talk about directional bias, I'm using a very simple approach of indicator base. Okay, so again, it takes away the guesswork, it takes away the discretionary aspect. It becomes very, very systematic. Okay, now today we're going to use 3 different EMAs, the 50, the 100, and the 200. Okay, so if today the EMA 50 is more than the 100, or I say is above the 100 and the 100 is above the 200, essentially we are in a bullish bias, which means I'm only interested in buy. Okay, if the EMA 50 is below the 100 and the 100 is also below the 200, we are in a bearish bias, which means I'm only interested in sell opportunities. I'm not interested in buying. Okay, but bear in mind, this doesn't mean that if I'm bullish bias, I'm going to buy immediately, right? This is just direction. I need to then identify my setup, which will then move in the second phase, right? So this is very, very straightforward, right? You might have different methods on doing it. You might have like more indicators. You might use price action, like higher highs, higher lows to determine an upwards trend, bullish bias, or vice versa. Okay, doesn't matter what method, but essentially you need to fit into your personality, right? It needs to be something that you enjoy, something that aligns with you as an individual. Okay, so this is the simplest model that I use to identify my direction if I'm doing intraday, right? Short-term time frame. Okay, so very, very straightforward, very clear. Now, once I have a clear direction I can focus, whether it's a bullish or buy or bearish, I will then move into this setup phase. Okay, again, this setup phase is basically telling me what are the conditions that I need, what are the criteria I need in order to execute a trade. If there is no setup, there's no trade. You can get a clear direction bias, but if you don't have a setup, there is no trade. Okay, so this strategy here, we're only going to be trading during the NY session, which is the New York session, right? Now, be aware, New York session has a slight shift in daylight saving, right? And of course, depending on your time zone, the time stated here is going to be different, right? 9 to 11 p.m. is based on my local time, which is GMT plus 8. Okay, so depending on where you are, you need to kind of adjust that. Now, when it's a daylight saving, we will push forward 1 hour, right? So today, right now, we are in 8 to 10 p.m. zone, right? Because with daylight saving, we basically need to push forward 1 hour, right? So New York session right now is actually 8 p.m. to 10 p.m. my time zone, which is GMT plus 8. Okay, so be aware of that. Okay, so depending on where you are, you need to adjust for that. Okay, so what does it mean? It means that if I have a directional bias, I'm only going to execute, that means enter a trade during this window of period. Now, obviously, it's not blindly just buying or selling within this period, but I'm going to look for the setup within this window of period. Okay, so you can see how I'm building a case, right? Building a trading plan. Number 2, I need to wait and see for a liquidity sweep, right? So what is a liquidity sweep? Is basically AKA what we call a fake breakout. Okay, meaning you're going to look at previous session highs and lows, right? Which means we look at Asia high, we look at Asia low, we look at London high, we look at London low. We want a fake break of this highs and lows. meaning price will need to take out that, right? Now, what does liquidity sweep also means is that it's the opposite direction of our bias. If today I want to buy, I want the market to sweep the low, fake break the low. That's what I need to see. If today I want to sell, I want to see a liquidity sweep off the high, right? So I need to see a break of the previous session high. In a while, I'll show you a chart, on the screen. Then we'll talk about that as well. Okay, but for now, these are the sets of criteria. Now, once we have a liquidity sweep, I will wait for a reversal candle. So if I want to buy, I want to see a bullish candle. If I want to sell, I want to see a bearish candle. Okay, now bear in mind, all this is when I have already established my bias, right? I'm not saying that, oh, if it's a bullish candle, I'm going to buy it, right? No, I need to first establish a bias. If today my bias is bearish, I don't buy when I see a bullish candle because I'm only focused on selling. Okay, so you need to be very clear on that. Now, once we have a reversal candle formation, that becomes our signal candle. We'll be entering, if you want to buy, at the high of the candle, and then our stop will be at the bottom. Can follow? Very straightforward. Okay. And then what we do is we target a risk to reward ratio of 1:2. Now, what does risk to reward ratio means is that today, if I'm going to put a 1% risk, I want to at least make back 2%. If I'm putting in a, let's say, for example, 30 pip stop, okay, I want to make back 60 pip. Okay, so that's what 1:2 means. Okay. Now, this is important because a lot of traders are only focusing on accuracy and win rate, right? I'm pretty sure some of you would already have questions like, oh, based on this strategy, what's your win rate? Okay. Now, win rate is important, but it's not everything. Okay. A lot of misunderstanding that, oh, the higher the accuracy is, the more profitable it is. Okay. It's not true because you need to factor in your risk to reward ratio. That means if today you're winning, how much are you winning? If today you're losing, how much are you losing on that trade? Okay. Now, a 50% win rate, meaning, for example, you take 10 trades, you win half, you lose half. You can be profitable if your risk to reward ratio on average is 1:2, meaning every time you win 2 times more than what you lose. A 50% win rate, you're profitable. Okay. Now, a lot of times traders will want to go for like 80-90% accuracy. It's not easy. Okay. It's not easy to achieve a 90 or 80% win rate. So what you want to do is you want to balance things out. Today, gun for, that means aim for 1:2 on average risk to reward ratio. And then your win rate doesn't need to be very high. As long as you have about 55% to 60% win rate, you're going to be very, very good. You do the math. Okay, meaning if today I do 60% win rate, every time I lose 1, meaning I lose 4, right? 4 trades I lost 4%. Now, of the 6 trade I win, every time I win 2%. That's a 12% return. Minus the 4% that I've lost is a net 8% return. You do the math, right? You can see 60% win rate, I'm very profitable, right? 55% win rate, I'm okay, right? A 50% win rate, you are still profitable with an average 1:2 risk to reward ratio, right? So I want you to be aware, don't just focus on win rate. And of course, today, if someone walk up to you and just ask you about win rate without talking about average risk to reward ratio, then at least you know you can educate and share with them. A high winning rate doesn't necessarily promise you a profitable strategy. You need to consider average win risk to reward ratio. Okay. Now, I want to very, very quickly just go over. Okay, if I can, let me see if I can do a screen share. Okay, can I request if we can share my other screen for the chart example? All right, good. Okay, so don't need to worry about all the things that's happening. I just want to really emphasize more on the framework, okay, and the simple strategy that I kind of talk about. I'll bring you over to where we are first. You can see here we have the 3 lines, right? That's basically your EMAs, right? If you look at it today, the green is the 50 is below the 100. The 100 is below the 200. Bearish bias. straightforward, right? Which means if today I'm going to look at intraday, I'm only be interested in selling. I'm not interested in buying. Okay. Then of course I've boxed out, you can see here Asia session. Now it's in London, and then we have the US, New York. Okay. Now I'm gonna just show you some couple of trades that has recently happened, so you can understand how this is put together. Right. So you look at this here this is on the 17th of March. Okay, which is basically this week, Monday. Okay, let me just remove that. Okay, if I'm gonna replay all this back, okay, so you can see we have number one, directional bias, right? The green MA, which is 50, is above 100, 100 is above 200, bullish. Okay, we have the Asian session. If I'm bullish, I want to see a liquidity sweep where below the session low. We have that. Okay, great. But we haven't entered into a prime time, right? Which is London market or US session. So what I want to wait is I want to wait for the next time London opens. We see a bullish candle shoot up. Okay, we are bullish bias. We have liquidity sweep. We have a reversal candle, a huge bullish candle. That's our signal candle happening during a prime time in London. Okay, so what we can do is we can put in a buy order just above the signal candle, stop loss just below that, and then you aim for a 1:2 on average. Okay, that's how you can set it up. Right now, it doesn't matter whether it's going to be winning or losing, because we won't know the actual trade result all the time when we're entering it. But what we know is that statistically, if I'm just going to win half the time, right, meaning half of the trade I take I'm going to lose, half the trade I take I'm going to win, it's still profitable. Why? Because my risk reward is 1:2. You can follow that thought process, right? Okay, so that's the process of it. Okay, now if I just play out this here, you can see how this trade eventually play out, right? Very straightforward, 1:2 risk to reward ratio. Okay, this is application on euro dollar, which is a very, very common major pair. Okay, now I'm going to show you another example on another currency pair. This is on GBP USD, right? Which is happening in the New York session. Okay, so if you come back to this, what do we have? Directional bias, 50 above the 100, 100 above the 200. Great. We are only focusing on buy. Okay, what we have, Asia session low taken up, but we're not going to enter just because it takes the Asian session low, right? This is called liquidity sweep. What we want to wait for is to enter the New York session, and we start to see a reversal candle, right? So you can see over here, we sweep that liquidity. Coming into New York, we have a bullish candle. What do? We'll take a buy at the signal candle high. If the market breaks it, our stop is just below the candle. We aim for 1:2. Okay, can follow that top process. Very, very simple strategy, right? Then we wait for the price to get in, right? So in this case here, you can see after you place this, the market went lower. It's fine. We haven't entered the trade because it never break the high. Then as it continues to develop, you see this pin. That's a reversal candle spot, right? So what we can do, we can actually enter after the pin has formed. Okay, and then we target same thing, 1:2. Okay, so the very, very next candle, we got involved in it, and then we let the market play out. Okay, eventually it went and hit our target as well for 1:2 take profit. Okay, very, very simple strategy. So what you can do is you can apply this on major pairs: euro dollar, GBP USD, dollar yen. Okay, those are your common FX instrument, right? Very, very recent. That's another profitable trade. Okay, today, if you're applying this on the major currency pair, like euro dollar, pound dollar, and dollar yen, you can trade both the London and the US session. Okay, now, if you are interested in gold or S&P as an index, you only trade the New York session, right? So that's the subtle difference. In FX, you can trade London and UK and US, right? London and New York. But if today you're looking at commodity like gold or S&P, you only trade the New York session. Okay, gold recently doesn't really have any signals. S&P as of last week, we did have one. Okay, this was last week's trade. Okay, this is one here. Let me give you an opposite direction, right? Okay. So why is this a sell? Because if you take a look at the MAs, EMAs, right? 50 is below 100, 100 is below 200, bearish, which means I'm not interested in buy. I'm only interested in sell. Then the setup comes in, right? If today I want to sell, I need to see a liquidity sweep above the previous session high. Okay, so I want to wait for that. Great, it swept. And then we comes New York. Huge bearish candle. What do? We look to sell it. If the market continues to go lower, stop loss above it, we aim for 1:2. Okay. The next candle, the market got us in, and then it goes and hits takes profit. Okay. Very simple, very straightforward. But the thing here is you need to be very disciplined. Okay. You realize it's not about straight away jumping in and looking for your trade setup. You want to establish a direction first, then you look for the setup. Now, to add that element of context, right? Can you help me to just go back to the slides? Okay. Now, to add the context over here, okay, you want to consider what's happening on a higher time frame. Okay. So what we can do is on the 15-minute, if we're bearish, we can check, is the hourly also the same direction? If it is, great. Okay. If it's not, then maybe it's a little bit, you want to be a little bit careful. Okay. You want to check on that particular day, is there any important major news like NFP, CPI, FOMC, etc.? If there are, you don't want to be entering the trades during the news. You want to wait for the news to be over. If there's still a setup, you can consider. Okay, but oftentimes when there's such news that day, you probably not trade. Okay, so those are elements of context, right? You want to look at additional factors to increase the probability of your trade. Then you also want to consider like simple things, support resistance, right? Is the market near a certain confluence area of resistance? That means if you're buying into it, is there a resistance that is preventing you from taking full profit, right? Or if you're selling, is there a major support that you need to be looking into, right? Those are things you want to add into it. Okay, and of course, if you're familiar with fundamentals, that's something you want to consider too. Can follow? So far, so good. Again, if you have any questions, put it into the comments tab. We'll take a look at those questions as we progress. Okay, good. So that's a very, very simple strategy, right? You're not gonna have trades every other single day, but on average, you're gonna get about like 3 to 4 trades. If you look at multiple instruments, you're gonna get about like 3 to 4 trades in a week. Again, it's not gonna be 100% win rate, as I covered. Even if you get a 55 to 60% win rate, it's great. Okay, you're still gonna be profitable. Good. Now, with that, I'm going to cover very quickly some of the little details that you want to take note of to become an effective IB, right? What I mean by that is you need to be clear as an IB what role you are taking up. Okay, your roles and responsibility, right? Are you simply just gonna get traders in, or do you want to also incorporate certain USP, right? We call it unique selling point, which means that you might provide additional service to your client to build that relationship, okay, as an IB, right? So over here, there are certain things that I think as an IB you should be at least equip yourself with, right? That means number one, you need to have that knowledge about the market, and then you want to share that with your clients, right? Meaning educate with your clients what we've covered today. That's, I think, the baseline of it. And of course, if today you're a trader yourself, you can also share trading opportunities with them. Like, you don't need to give them signals. You can give them ideas like, hey, take a look at this particular instrument. There might be an opportunity in the near term. You can go and take a look at it, pay attention to it, right? I don't really believe in providing or spoon feeding signals, because then, you're not really providing the education element, right? So you want to provide opportunities, you want to give insights, but probably not like buy here, sell here, right? Because you don't want to be responsible for that decision as well. Every trader is different. Okay, so of course you also want to provide high quality services, right? In terms of like if they have certain questions about the market, have certain questions about the platform, you want to be able to answer that. Okay, so those are some things you want to take note. You want to potentially also develop, your own marketing skills, right? For example, using social media, providing some content, doing some market sharing, market analysis, and things like that. Okay, this would be something that you can actually provide for your clients um, to stand out as an IB, right? Because if everyone out there is an IB, how do you be different, right? How do you stand out from the rest? These are some things that you can do, right? So you can also do host webinars and workshops like what we're doing here, okay? Providing the education, providing the ideas, the market outlook for them, okay? So giving you some ideas on what you can work on, okay? Now, why education is important? Because today, if you're attracting traders as part of your IB, right, you don't want them to just come in, put a deposit, take some trades, lose, and then get out, right? You want to build a sustainable clientele, right? And to do that, you need to provide education to them so that they improve as they trade and they start to see results, right? And if today they start to see positive results, they're going to probably stick with you and continue trading, okay? So you want to be focused on like how can you develop a sustainable clientele base, right? And this is something you want to do, right? You want to educate yourself so that you can pass on the education to them so that they improve as well. And then from there, hey, they will continue to trade under you. Okay. So a lot of all this at the end of the day is ideas that you should be developing on how to, number one, provide value and service to your client. And in order to do that, obviously you yourself has to have that kind of knowledge as well, to pass on to them, right? So it's a win-win situation because while you're focusing on doing and providing value and service to your client, you are also improving as an individual, right? So I hope that's good. Good. Hey, so with that, let's jump into the Q&A session, right? To kind of see if you guys have any questions over here. Feel free to ask any questions. It can be, things that we covered today. It might be questions related to trading that we did not touch on the topic, but you're very interested in. Okay. Feel free to drop it into the comment. We'll take a look at them and answer your questions accordingly as well. Okay. We do have about like 15 minutes allocated for Q&A. So use this time as much as possible. Okay. If there's a lot of questions, we may not be able to answer everyone. But use this time because again, this is a good opportunity for you to ask any questions regarding trading that you have. Okay. Good. I'll be monitoring the comments as well, but I think Crystal here would also help to moderate some of those questions, right? So if you have anything, just drop in the comment section.
Sure. Thank you so much once again for Mr. Kayong for the presentation. Another knowledge added to our mind. So I hope that everyone can implement the knowledge later to become a better trader with IUX. Okay, as Mr. Kayong mentioned previously that we are jumping in to the Q&A session, and please cherish this moment and please use this moment to ask what you want to know about trading world with Mr. Karyong. So I would like to let everyone to please submit your question in the comment section so we can read it, and we have Mr. Karyong here to answer your curiosity. Okay, but first of all, let me greet the audience from Malaysia and Laos. Thank you for coming here. All right. While waiting for the questions to be received here, I would like to have a small chit chat with Mr. Karyong. As the first session, you are mentioning about the mistakes to avoid to become a trader. I really want to know. I believe you have a long experience. That's why you are here as the speaker. We trust you to share your knowledge and experience for us. But when you were a beginner for as a trader, what mistake you have made, and how was your response toward it?
Oh, okay. Uh, I would say it wasn't really a mistake if you look at it from a perspective of like lessons that you can learn from the market, which I strongly believe all traders would need to go through that process, right? It's a matter of like, can you shorten the process? Can you make it less painful? But you still need to go through it, right? And I would say like things like misconception as well in terms of jumping from one strategy to another, right? A lot of times, experienced traders would tell the new traders, you don't want to jump across different strategy. You want to fix to one. However, that's true. However, at an early stage, it's not really a mistake if you're jumping from one strategy to another, because if you are in an exploration stage, you need to do that. You need to go through the process of like trying it out so that does this fit you as an individual? Do you like it? Yes, no, and then you move on, right? I always kind of like put that in the perspective of martial arts. Today, if you are asking someone, in the world of martial arts, is karate better, is taekwondo better, is Wing Chun better, or whatever, right? There's no which is better, but at the end of the day, is which one fits you as an individual the best, right? And the only way to find out is go and explore, go and test it out, right? So same thing applies in trading strategy. The other aspect is every trader will eventually blow an account. The question is how big that account is going to be, right? Because it's a natural process that every trader I feel needs to go through it. Okay, that is where you have that whole journey of like overconfidence, FOMO, revenge trading, and things like that. You need to go through it. The question is how big is the account you're going to blow, right? Is it a big account or is it going to be a small account? So the idea is you want to make sure when you go through that stage, you want to be blowing a small account and not a big account, right? And how to do that obviously is part of like risk management. You start small, you don't start big. Eventually, you build up, that confidence and scale your account accordingly, right? So I think again, these are some of the mistakes that every trader will need to go through. But if you kind of look at it from another perspective, it's like learning points that needs to go through in order for you kind of become the trader that you would want to eventually become. Yeah.
Okay. So I might say that as a beginner, so mistakes are normal, right? But the way we recover from it is the most important thing, right? So
Yeah.
normal to maybe made a little bit mistake, but we have to find another strategy in a quick time to recover from it and don't do it again later in the
Correct.
future. Okay, thank you, Mr. Karyong, for the answer. And we have the next question coming from the audience from the comment section. The questions is, what are some misconceptions about trading that you often hear?
Mm-hmm. Or I would say one that I always encounter is the idea of win rate. Okay. A lot of traders win rate ties in with quantity of trades, right? A lot of times traders will have that impression. The more trades you take, the more profit you're going to be, right? And that would naturally lead to them going into very, very small time frames. Okay. Like they would think that if today I can take 5 trades, I'm going to be more profitable than the trader who only take 1 trade. Okay. It's not entirely true. So that's a common misconception. Another aspect is winning rate, right? Which I kind of also shared and explained in detail throughout the presentation. A lot of times traders only focus on that, right? What's your win rate? What's the accuracy of this strategy? That's not the entire thing. And personally, today, if you want to hit a 90%, 80% win rate, it's not easy. Can you do it? Yes. Is it going to be easy? It's not, right? So, to balance things out, you want to strike for something that is more attainable so that you don't stress yourself out. But at the same time, balance out how can I achieve a win rate that is lower but yet still profitable? That's where risk to reward ratio comes in, right? So, I feel that this two is kind of the most common misconception that traders would have in the market, right? And I think as an IB, you want to pass on this perspective to your clients as well. Okay, and of course, you also need to balance out in such a way where, as an IB, obviously you want your client to be trading actively. Okay, but at the same time, you want to balance out the part where you want to have a trader's perspective as well when you share things with them, right? You want to benefit them as well as a trader, not just as an IB itself, right? So you need to balance things out as an IB.
Okay, we should balance things out as an IB. I hope that answer the question from SK, and thank you for the question. Another question may be coming from everybody, coming from other audience here. I believe you guys have more curiosity, and don't forget to cherish this moment to ask everything about trading to Mr. Karyong. Okay, coming from Hendra. Hi, Hendra. So the question is, how about the risk if we use a small amount?
All right. Now, obviously, if today you are okay, small amount is quite relative, right? But the idea here is if you're trading with a $500 account, for example, okay, and you want to apply the standard kind of suggested risk tolerance of 1 to 2%, then 1% of a $500 is just $5. Okay. Now, to be very honest, if today you want to put in a $5 risk on a trade, you are quite limited, right? Because sometimes your stop might be wider and then it exit the $5 risk, you're not able to trade it. Okay. So if today your account is a little bit smaller, you need to then readjust your perspective of risk per trade to perhaps a dollar amount. Okay. So for example, if today you're working with a $500 account, you might say that, okay, every trade I take, I'm going to put in maybe a $20 risk. Okay. Now, $20 out of 500 is a sizable percentage, but in dollar amount, $20 is still pretty much acceptable to many individuals. Okay. So if your account is small, then my perspective here is you might want to readjust your view on risk, not in percentage, but in dollar terms. It means every time you take a trade, you risk $20. Okay. And then, of course, you need to then adjust based on the stop loss. Can this fits into the position size of, let's say, limiting to $20 risk per trade? Okay. For example, now if your account starts to scale to $1,000, then you can start to use in percentage, right? Because 1% of 1,000 is $10. You can use 2%, $20. Okay. So that's the idea. If you're using a small account, okay, you need to then be working on dollar terms. And of course, in trading, even with the smallest lot size, you need to be prepared of a certain amount of risk, right? You cannot say that I'm only willing to risk $1, right? Then it's very, very difficult for you to be trading. Okay. The minimum risk per trade, personally, I would say you need to be very comfortable with $10 to $20 per trade. If you can't take that, it's going to be a struggle in executing, right? Because the whole emotional aspect will comes in. Yeah.
Okay. Okay, Hendra has the continuation from the first question. So what do you think if I use EA? Because I don't have much knowledge for trading, but I want to make a lot of profit.
Mhm.
Sir
Okay.
Karyo.
EA itself, it's doable, but at the same time, you need to be you need to have that knowledge in the market to use EA, right? Um, it's like EA, you look at it as a tool, right? If today you have no knowledge of the market and then you want to apply this tool, then you're essentially blindly using it. You might use it wrongly, you might not, you might burn yourself because of that and things like this. My suggestion for traders who want to use EA is always develop the understanding of the market first. Then you also need to develop the understanding of how these EAs are usually developed. What are the strategies and risk management that most of these EAs are doing? You need to understand the upside, understand the downside. Can you accept it? And then you start using it, right? And then with all those understanding, only can you manage the EA. Okay. So if today you're fairly new to the markets, you're fairly new to trading, and then you want to jump straight into an EA, most often than not, you're not going to benefit from it eventually, right? You might see some short-term profits, but eventually it's not going to be sustainable. Okay. So that's my take And my advice to traders who want to use EA, if you're not familiar with the markets, you don't have the sufficient knowledge about how trading works, it's not going to be sustainable.
Okay, Hendra, that's the answers from Mr. Karyong. So if you use small amount, we need to readjust the perspective about trading, right? And even though we use the expert advisor, we still need to be update about the market trend in trading world. All right, next question. Please do not be shy. Mr. Karyong will be happy to answer all your curiosity and your questions here. Okay, for those who maybe missed something or missed a part from Mr. Carr's presentation, you can re-ask again, you can reconfirm again here in the comment section, because we want to make sure that after this session has finished, you are going back to your activity with the complete knowledge, with the complete insights from Mr. Karyong, and we don't want you to miss a little bit knowledge that we have shared today. So make sure you can ask everything. Maybe the friends from the trader from Malaysia, from Laos, from Thailand. Any question? All right. So for today, we already listen and hear about the basic knowledge about being a trader, about the mistakes that we need to avoid, about the risk management, and how to be an effective introducing broker or IB. So, what about we are giving a reward for those who are really enjoying the session, listening the session from Mr. Karyong by doing some quiz maybe. Are you guys ready for the quiz? And we have reward for those who can answer it quickly. We will give you the reward for those who can answer it. The first who answer the question will be given a reward. Are you guys ready? Okay. Anyone else? Or before we jump into the rewarding session, maybe if there's someone who would like to ask again to Mr. Karyong, we still give you a time and chance to throw the question here in the comment section. All right, if no more questions, I believe everyone is ready for the rewarding session. So please prepare your screen, please prepare your answer. And for those who think that you know the answer, you can type your answer on the comment section. And for those who answer it very quick, or the first who answer the question will be given a reward from IUX. Okay, without further ado, let's start the rewarding session by giving the questions to the audience. Okay, the first question. What is what is one of the most common mistakes new traders make? A. Trading without a plan. B. Always following the trend. C. Using stop loss orders. The answer from Muhammad Basari Matno is A, trading without a plan. Okay, the correct answer is A, trading without a plan. All right, let's move to the next question. What is liquidity from the material we have discussed before? A, the ease of buying or selling an asset without affecting its price. B, buying and selling any assets. C, the number of traders in the market. If the first winner from the first question is Muhammad Basari, so who will be the next winner for the second question? Okay, is it A, the ease of buying or selling an asset without affecting its price, or B, buying and selling any assets, or C, the number of traders? Okay, the answer is A, the ease of buying or selling an asset without affecting its price. And congratulations. Who was the first to answer the second question? Anyone notice? Okay, third question. How many trading sessions are there in the Forex market? A, 2, B, 5, C, 4. Okay, the winner from the second question was Anura Auta. Congratulations. And who will be the winner for the third question? Okay, so many answers. The third winner is, congratulations, SK. Yay. Okay, shall we move to the fourth question of the day? Okay, the fourth question is here. From the options below, which one is correct for managing your emotions when trading? A, read a book about investment. B, practice mindfulness and patience. C, release all emotions to your friend. Oh my God. Okay, I have found the winner for the fourth question, and congratulations once again for Muhammad Basari. The answer is B, practice mindfulness and patience. Okay, sorry, the name is Muhammad Basari. Okay, this is the next question. Based on the material that was given by Sir Karyong Ang, as an IB, what should you do to support your clients? A, executing trades on behalf of clients. B, provide better leverage to traders. C, share market insights, trading strategies, and risk management tips. All right, for the question number 5, the winner is still Muhammad Baseri. The answer is correct. C, share market insights and trading strategies and risk management tips. Wow, Muhammad Baseri, great. Okay, is there anyone can beat Muhammad for the next question? All right, this is the sixth question. What is the correct way to protect the capital when doing trading? A, risk management. B, placing as many lots as possible. C, not opening any trading positions at all. Okay. Who can beat Muhammad Baseri for this rewarding session? Okay, what is the answer for question number 6? The answer is A, risk management. And the winner goes to, is it still Muhammad Baseri or? Okay. And it's still Muhammad Baseri, the winner for the sixth question. The key is to focus on the presentation, yeah? Seventh question, what is the minimum lot given by IUX to be able to open a trading position? A, 0.1 lot. B, 0.01 lot. C, 1 lot. Question 7. The answer is B, 0.01 lot. And the first who answered the question correctly is wow, very competitive, yeah? Question number 7. Congratulations, SK. Question number 8. What type of spread does IUX.com offer? A, starting from 1.0 pips, starting from 10.0 pips. C, starting from 0.0 pips. Baseri, SK, and other, please answer it correctly. According to the system, the winner for question number 8 is okay, congrats, Mary, answering with C, starting from 0.0 pips. Let's move to the next question. What is market volatility? A, asset price fluctuations. B, a situation where the price always goes up. C, reduce the value of investments. Okay, it's getting more competitive right now. I saw that more people are being a little bit ambitious to get the reward. It's a good news. Market volatility is A, asset price fluctuations. And the first who answered the question correctly is congratulations once again for Muhammad Baseri. Question number 10. What percentage of risk can be taken in opening one trading position? A, 2 to 5%. B, 7 to 20%. C, 1 to 2%. And this is the very last question for the rewarding session. So make sure your answer is quick but correct. The answer is C, 1 to 2%. And the winner for the final question is Mary. Congratulations for Mary for winning the final questions, the 10th question. And thank you for everyone for joining the rewarding session. Thank you for joining the Q&A sessions. And don't forget that you guys have a reward by answering the questions, by following the challenge that we give to you guys this afternoon. Okay, for those who receive a reward, please send the email, send a message to the email kevin@iux.com. KEVIN@iux.com. The reward is a souvenirs like tumbler and any goodie bag. So you can contact Kevin through email to get the reward. The address is kevin@iux.com. KEVIN@iux.com. All right, so the rewarding session is the very last session from today's event. So once again, thank you so much for all the audience coming from the countries in Southeast Asia. Thank you for the audience from Indonesia, Malaysia, Thailand, and Philippines, maybe. Thank you for joining the session. Thank you for listening to the presentation. And we really do hope that you really gain more knowledge about trading. And we really hope that one day we can see you and share more knowledge again about trading. And thank you also for the one and only Mr. Karyong for sharing the very insightful tips and tricks for the traders, for those who are still beginners, or for those who are have a long experience in trading. So I really hope success for you, and thank you also for IUX for making this event possible, and thank you for having me for today's event. It's very special, and I see you next time, and I'm happy to hosting the event here. Once again, thank you, and see you anytime, anywhere. Bye bye.